The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you have markets coming into pre-market session lows. We're right back to where we were last night. A little bit of an acceleration. We got Netflix trading lower. That's bringing the NASDAQ 100 down. Markets, S&P's off about 1/3%. So much for 4,600. Relatively speaking, though, folks, still within about 220 points of all-time highs. Pretty remarkable. Yesterday, we spent most of the session above 4,600. Today, we're down about 15 points. NASDAQ 100. There's your acceleration below the lows of last evening. We're making basically pre-market session lows right now in the NASDAQ 100 as well, off 0.8%. You see the Dow off about 20 points in the Russell. You could call it the leader as it's flat right now, just under 2,000 at 1997. We get the Dow back above 35,000 right now. Quite the acceleration this week. You jump over to crude, up 50 cents. Little volatility yesterday for crude, 75.84. You have gold right now, negative by $4. We got jobless claims out this morning at 8:30. Gold off $5 at 1976. We'll jump into jobless claims. 220-something thousand jobs, I believe, under the estimates yet again. We jump over to notes and bonds. Lower price and higher yields coming back at you. A little bit of inflation angst. The economy continuing to run hot right now. You get the 10-year off 22 ticks, 112.10. Talk about volatility, man, right? Look at the size of that red bar. Calmness in the bond markets, not so much lately, as you have the 10-year off 22 ticks right now. You got the 30-year off a full point right now. You jump over to the dollar index. As you may expect, dollar catching a bid. Off of that 100 price point, we're back to 153 ticks on the dollar index. You jump over to the VIX with some negative action this morning, spiking. Almost got to a 12 handle early yesterday. We're trading at 1404 on that volatility index. All things considered, you take a look at the daily. Remarkable that we've been in this low volatility period almost going on 2 months, right? You really had to drop out of bed, man, coming into June, and we've been shopping around between about 13 and 14 over that period of time. We'll see where today goes. We'll start things off and take a look at Netflix. Netflix shares, it's been on a tear. You're going to open at around 450. This is a daily, okay? So for some context here, all you're doing is you're giving back the acceleration this had early in the week. You put it on a 5-minute, and I'm talking about, really that acceleration you had on Tuesday, where you went from 450 to 475 throughout the day, coming into their earnings after the close yesterday. Netflix trades lower. On those numbers, we'll jump over to those in a moment. We have Tesla out with their numbers as well. Tesla with a pullback. I mean, these two equities, right? That's going to put a hurt on the growth stocks. Tesla off, $13 right now at 278. You got IBM with their numbers last night. IBM trading lower as well, off about a couple dollars. Getting into Netflix. That crackdown on passwords, they added almost 6 million customers, more than double the estimates. But man, pretty remarkable in terms of the sell-off. It's all about what are you going to do for me in the future? Projecting third quarter revenue that fell short of estimates, suggesting a crackdown on password sharing and a new advertising tier aren't yet delivering the sales growth analysts anticipated. Pretty remarkable, because that password crackdown, you think about the amount of people that have been mooching off of other people's plans. Pretty remarkable that they can't beat estimates, but that's what happens sometimes when you get in these types of multiples. I mean, for some context here on Netflix, okay? Context is important. You got to back it up even more than that. Yeah, we've just tripled in price. You're up 200% in the last year on Netflix. And you're still almost up 200% when you're going to open at $450. So there's a lot of optimism built into this thing. You're trading right now at $450. It's going to be quite a drop-off. The results were fine, but not enough to move the stock higher, given the move in the past 3 months. Exactly. Now, the increase of subscribers, quite a bump, almost 6 million. The biggest second quarter since the depths of the pandemic 3 years ago, and far surpassed the estimates of 2 million. I mean, how are they thinking 2 million with everything going on, right? And how are they thinking 2 million, and how are they thinking revenue is going to be a bigger number going forward? Meanwhile, they add 6 million, and revenue going forward is not going to be what they were looking for. They initially warned it would see an uptick in cancellations starting at the start of the crackdown. New signups are already exceeding cancellations. Sales growth will accelerate in the months ahead. In the third quarter, growth projected at 7.5%. They raised the 2023 forecast for free cash flow to $5 billion from at least $3.5 previously. Decent numbers, but revenue's not going to be there going forward. Let's see how this is hitting some of the other streamers out there. You got Disney down marginally with the market. No real huge reaction. You see a trade lower last night on those numbers. We're down about 40 pennies right now. You jump over to Warner Brothers Discovery. This thing's been struggling, all these, right? It's going to be interesting to see how this plays out with the strike as well. Paramount down at $16. Very difficult business, man. Netflix, the clear leader by far. And Disney's got a lot more going on there. Pretty remarkable. Let's go back to, some of these equities, right? The world was ceasing to exist when Disney shares traded to $80. And somehow this stock has pulled back there as they're trying to get over that hump. If there's somebody that can do it, it's probably Iger, but boy, he's got quite a task. Iger, he's got quite a task ahead of himself as competition heats up in a big way, and you're seeing it as Netflix gets punished on their numbers. Even though they add almost 6 million subscribers, they've clamped down on password sharing. They have an ad-supported, less expensive tier to get in there, and still the market not happy with where they're going forward. All right, we jump over to Tesla shares. Tesla trading down to 278. Pretty similar story, though, in that you just give him back a few days of gains for all these equities, right? It's really just a few days of gains. The Tesla sinks as Musk warns of more blows to profitability. Now, who was it that just came out? Was it Ford? I think the electric F-150, right? That cut their prices. Tesla's been cutting their prices dramatically. They missed on margins while beating earnings estimates. The company's pouring money into AI and the new Cybertruck. Shrinking margins. Yeah, that's a worry, man. They were doing phenomenal with up to 30% coming into the first quarter of 2022. You're now back to 18% for margins, and it's probably going lower, especially if you get some of their competitors cutting, right? You have Ford out there cutting. Musk is they are at the point in time where they are going to sacrifice profits for market share. That's the deal, man. And, my dad was talking about it on his show yesterday, saying it's remarkable how Elon got away with selling so many shares above where it was trading at right now, $300 to $400, and nobody even talks about it, man. So yeah, he's lost a lot of money with Twitter. But remember, folks, he took that money out of Tesla and put it into Twitter at the time when Tesla shares traded from 400 to 100. You think that's by chance? I don't think that's by chance. It's possible, but that's probably not a coincidence. Boy, you take a longer-term picture at this market, right? Remarkable strength. You're pushing 45.79 on a weekly basis. Check out. We're getting a little negative action right now. We have the NASDAQ 100 off about 1%. On a weekly basis, man, we still got quite a green bar. We're into Thursday. We have 2 full trading days left right now. Check out the NASDAQ 100 on a weekly basis. You plow higher last week. We're higher this week. Let's jump over to Microsoft shares this morning. Microsoft, pairing those gains a bit with the NASDAQ 100. Stay tuned, folks. We'll be coming back after the break, talking to our man Kevin Hicks from TD Ameritrade Network. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&P futures negative by about 17 right now. That's 0.4% in the red. You get the NASDAQ 100 off 146. That's 0.9% in the red. We get some Tesla numbers, some Netflix numbers, bringing those markets down. To talk about some of the action, let's jump over to our man Kevin Hinks. Every trading day, folks, right here, 12 noon Eastern time. Fast Market from the TD Ameritrade Network. Your host, Kevin Hinks, Tom White. They have an outstanding team, folks. They walk you through hypothetical trade setups, all of them using options, all of them with defined risk. We're coming into an excellent time of the year. It's earnings season. Kevin Hinks, good morning.
Get interesting now because, Tommy, the market, and we talked about this a lot yesterday, Tommy, and that is stocks that have run so far, the bar is so high. 2 things to watch. Number one, the market seizes on any weakness, like, for instance, Tesla, good numbers, beat on earnings per share, beat on revenue, but margins are a little lower than thought, stocks down. Netflix, great earnings per share, big beat, 5.9 million subscribers, but revenue was a bit light. Stocks seized on that. They're seizing on the negative when you run this far. When this group of stocks, this 7 or 8, if you throw in Netflix, have run this far, the bar is so high, it takes a feather to knock them over, Tommy. So I'm going to watch Tesla and Netflix, obviously, today, but I'm also going to watch NVIDIA and Meta and Amazon. We're going to trade Amazon today on the show. We're going to watch Google, Alphabet. Even Microsoft with good news is a little bit soft pre-market, and Apple also with good news. So then the last thing is, Tommy, do these 7 or 8 or this group of stocks, do they start trading in a sector, right? Do they start creating their own sector of AI, high-cap tech? It's going to be really fun to watch this play out, Tommy.
I was going to ask you some great points, man, and pretty remarkable when you look at even a company like Netflix, Kevin. You laid it out well in terms of they've just risen so dramatically. I mean, realistically, you had a $50 pullback last night, Kevin, from 480. I got it up on the Thinkorswim platform you spiked actually to 495, but I'm just going from 480 down to 430 and 41 pennies. You're at about 450. That's where you were trading at on Tuesday morning, which is pretty remarkable in that context. Tesla, you're not even back a week in terms of what they gave up, and both of those equities have been running for months, if not since the beginning of the year. What does that say to a company like Microsoft, for example? And boy, that chart, man, I pulled up since March or the beginning of the year, 220 to 360, adding $1 trillion of market cap on some of those equities. And it is interesting how some of them start to move together. They're talking about it in the Tiger's Den. You know, somebody's selling the Magnificent Seven. They've all run so far. We're going to get to see it play out. What do you think of yields today, Kevin? We have a little bit of a reversal of the trend that we've been seeing this morning with some higher yield, lower price.
Yeah, well, look at the higher dollar, higher yields, higher crude oil. That's all going to work against stocks today, Tommy. That jobless claims number back down to those low levels below 230,000, comes in at 228,000. The labor market, Tommy, is still strong. It shows little brief glimpses that it may want to go higher, but then it comes right back down. So I think the yields and the dollar are because of that. So, yeah, that's another thing we have to watch today, right? That'll work against the market throughout the day. But, you know, this is going to be an interesting day. You know, the NASDAQ starting out, you know, down 137 points here in the futures to start the day. I think, you know, let's see if these stocks, this 7 or 8 stocks, if they start to trade like their own little sector. And if they do, it's going to weigh on the NASDAQ. It's going to weigh on the S&P 500, Tommy. So things could get a little interesting here.
Yeah, I was going to say, if they do maybe today, watch out. And that's my words, man, because I agree, just quick pullbacks, but the moves have been so, no pun intended, magnificent to the upside that, boy, these pullbacks, and we're sitting at just such lofty levels, man. With that in mind, we're still coming into Thursday. We're coming into some great earnings throughout the weeks coming up, Kevin. Do you guys have any equities you're talking about on Fast Market coming up at 12 today?
Portfolio is going to do a presentation on American Express that has earnings before the open tomorrow morning. Then we're going to look at Amazon. We're going to start looking at pre-earnings at some of these trades. Does Amazon move with, you know, the movement out of Tesla and Netflix? And then we're going to trade Target. We're going to start looking at retailers. Like I said, getting ahead of some of their earnings, see where it's run, see what we can do to trade these.
Pretty interesting when I pull up those charts. Boy, Target, quite a pullback, man, right? From 270, we're trading right now on the Thinkorswim platform at about 132. And you mentioned you were going to talk about Amazon. What do you think of Amazon, Kevin? We're trading at 135. This year we kicked it off at about $80. It's ran like everything else, but nothing like some of those other FANG or Magnificent Seven stocks when Amazon was up at almost 190 at one point. It's trading at 135. What do you think of Amazon? Give us a little teaser for the conversation on Fast Market coming up today.
Yeah. Amazon, the e-commerce massive retailer, but that's not where their growth comes from. As you know, Tommy, their growth comes from AWS. And that decelerating growth in AWS has caused some problems. Now, if the market recovers, if the overall economy firms up and starts to continue to recover, Amazon's probably going to do well. Their numbers are going to be pretty solid. And we're going to break down, you know, is AWS, you know, capturing more market share in cloud, or is competition setting in? Remember, competition is what's going to affect a lot of these companies. You think competition's not going to affect AI? Of course it is. Just like streaming did 2 years ago, just like crypto did, 3-4 years ago. These stocks get crazy, and then, Tommy, they don't.
Well said, man. Kevin, I appreciate the time on a busy morning as always. We'll be watching at 12 o'clock today, and we don't talk to you tomorrow. I'll talk to you on Tuesday, man.
Great to be on, Tommy. Have a great day.
Always a pleasure. Folks, check it out. They'll be talking about American Express. Yeah, they get their numbers tomorrow before the bell. American Express down about $4, $3 right now in the pre-market. Held up relatively well, right? 177 for American Express. And yeah, Amazon, an interesting one, man. You look at the cloud structure in terms of Microsoft, all-time highs, right? You got the AI Bing search combination in there, of course, accelerating Microsoft to higher prices. They come out with their price scale this week. That just skyrockets Microsoft to all-time highs. You're going to open at about 253 for Microsoft shares. You jump over to Apple, man. Guess what? Surprise, surprise. Apple's working on an AI bot, too. Just call it Apple GPT, as they were talking about yesterday. You want to see a spike on that stock, How about an entire give back, though? We were trading about 193.50. You actually got below that price tag after trading all the way up to 198. This thing's not going to be available even until 2024. That seems like an eternity away from where we are right now when you talk about how quickly these AI stocks have risen. You jump over to NVIDIA shares. You talk about a run, man. It's not stopping. That's a daily basis. We hit 480 6 days ago. What's that, last Friday? Yeah, last Friday we hit 480. Basically pushing all-time highs for NVIDIA shares. And Kevin laid out the conversation well. I mean, in terms of the conversation I'm having with myself even, right? Saying, boy, these are some lofty expectations. We're coming into earnings season. And if you think those equities deserve to get punished for those numbers, man, they were pretty decent numbers. Netflix added 6 million subscribers versus the market thinking they were adding 2. Remember when we thought that Netflix was going to be on the decline? Remember that? They lost subscribers, and everyone's like, oh, this is it, right? They've maxed out subscribers. They just added 6 million subscribers, and Netflix is going to have one of its biggest pullbacks ever, trading down $30 on the open. So we'll see where we go. Stay tuned, folks. We're coming back for the open. I'll be right back in 3 minutes. Don't go away.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. Taking a look at Microsoft longer term. Microsoft right now, we open down 0.2%. You got the S&Ps catch a little bit of a bid going into the opening bell there. we're down just 10 points. NASDAQ 100, a little bit of a bid as well. We're down just 0.7%. Dow up 82 points right now. Russell negative by 3. We jump over to the companies with their numbers. Netflix down 6.2%. You're down $30. As I was mentioning to Kevin, right? You're only back to Tuesday's open, man. But pretty interesting when you look at it. Used to be about those numbers, and it is a huge reversal. Remember the conversation before they had ad supported. The whole conversation was, that's it. They've hit everybody. They're not adding any more people. They've hit max capacity, basically, in terms of the number of subscribers and their reach and their net ads. They added 6 million people, but the stock has run triple from where it was trading at almost in the beginning of the year. You jump over to Tesla shares. It's been quite a run as well. They're dropping. Down about 5% for Tesla shares on the open at 276. Margins, as Kevin said, we talked about at the beginning of the program as well. Margins a problem. And I imagine they're going to be a problem, man. Excuse me. Because Tesla is way behind where they need to be in terms of economies of scale as they ramp things up. And I imagine that Elon has made that transition. And it might be a difficult transition over a couple of years as they try and really ramp things up, because they are going to face a hefty amount of competition from many of the big car makers that are really starting to come into EVs in a big way. We'll see where they play out. IBM had their numbers as well. There's a bid for you. I'm sure that's what's helping part of the Dow right now. IBM up about 2%. They accelerate on the open. Look at that, man. Market wasn't sure what to do. It opens, look at right before the market, 920. This thing accelerates higher. We popped to 139. IBM up about 2%. Let's see how the big dogs are doing. Apple shares, look at this, man. Wild. I mean, for some context here, right? Apple, look at right before the market and then right into it. Let's put it on a minute to see that acceleration. Yeah, look at that. Right 5 minutes before the market, man. They plow this thing up $1. It goes up another $1 on the open. NASDAQ 100 just got back half of their losses. You got the Dow up 70 right now. S&Ps are only down single digits. Looks like this market may be saving itself for a few minutes at least. The day is young, as our man Basil Chapman says, but interesting accelerations. And for some context, as I always say, 16 billion shares outstanding. Apple just adds $32 billion in market cap from where it was at 9:22 a.m. this morning. Remarkable. Let's see how some of the other Magnificent Seven. Microsoft. They are trading in tandem, even though you got the NASDAQ 100 lower. Look at Microsoft is up 0.3%. Apple's up 0.4% right now. Google shares is up 0.25%. Amazon is slightly in the red, off 0.7 right now. Meta shares off 0.5%. Tesla shares off 4.2%. We jump back to Netflix shares, dropping on that open, off 7.7%, man. $36 to the downside for Netflix on the open. Again, context is important, folks, okay? Look at this bar, still quite an acceleration. All you're doing is going back to where we were last week after this thing ran from 300 this year to 450, 480, and it was at 162 about a year ago. Yeah, lofty expectations, man. It's going to be interesting to see. You think that's some lofty expectations? What do you think it's going to be for Microsoft when this thing trades from 220 to 360, right? What do you think they're going to be for Apple when you trade? I mean, this is starting to get pretty bonkers, the numbers you're dealing with here. 123. What's our low? Let's do it. Let's do it right now. Why not? How much have they added? Because we're dealing with video game style numbers, man. What do I got for a low here? 124.17 is the low to kick off the week. 124.17. And we just hit a high yesterday of 198. You're talking about $74 of acceleration to the upside. And as I always mention, I'm going to get the exact number actually of shares. 15.728. All right. Times 15.728 app. Sorry, 1 second. I mean, it's I want to know how many, because this is what is built in to this. Sorry, some reason my calculator is not working, man. 124.17 times 15.7 billion. Is that right? What have they added? All right, I'll do that at the break. My calculator is broken. I got to reset it for some reason. Optimism is high, folks. Expectations sky high. Apple, I mean, what are we sitting at market cap? We're so much for $3 trillion. We're at 3.1, just like that. Remarkable. All right, what else do we have going on? We have weekly jobless claims out this morning, 228,000. We have unemployment rate, 3.6% right now. That number falling to 228,000. Remarkable that this is the conversation as we are going into one more hike, which is now, 6 days away. All but a surety that will be happening on Wednesday. The real interesting conversation is what happens in September and going forward from there. Continuing claims did rise. We're still only talking about tens of thousands, man, when you're dealing with a number that's 1.75 million, okay? Continuing claims, they are 1 week delayed versus the number we're getting on initial jobless claims. Rose by 33,000 to 1.75 million. That's for the week ended July 8th. That is the largest increase in more than 3 months. For some context here, though, okay, we'll blow this up. On the bottom, you have continuing claims. On the top, you have initial jobless claims. If anything, those numbers are going down, man. Okay, yeah, we have an uptick to some degree on the continuing front, but there is no squeeze in the job market right now whatsoever. We jump to the Fed. As I mentioned, a hike expected in 6 days, but where do we go from there, okay? The market is thinking we're done. That's what they're thinking. So they're going to raise to 5.25 to 5.5, call it 5.375, right? That should be your money market interest rate right now, folks. If you're not getting at least 5.25%, do some research and get out there because you can get it on a money market basis when the Fed is giving it. You go out a little bit longer, okay, you're getting about 5.3% for CDs right now, super short term, because the bank's going to be getting more than that on the money just from the Fed overnight lending rate, okay? But you start going out half a year, 2 years, then you have to factor in the cuts. So that's where things go down in terms of the CD rates. I'll pull them up again this morning. Why not? It's interesting to keep your eye on them. Now, here's what economists are looking for in terms of the survey that they have here. Okay, this is the Bloomberg News Survey of Economists, July 13th through 18th. You have the July survey in black. You have the June survey in blue. Okay. As you can see, we're higher as we've baked in that rate hike that's coming in July. That wasn't a surety when this June survey was going on, okay? So the black versus the blue has us at 5.5% right now versus maybe we were at 5.3 a month ago. What's interesting is where we go from there, okay? And it seems that we're going to stay a little bit higher than the market was looking for. And by number one, we're talking about June. You're looking at maybe 4.8%. You were at 4.5. And when you go out one more year, okay, June of 2025, still talking about the Fed being at maybe 3.5%, 3%. That can change quickly, as we all know. We'll finish this conversation when I get back because we'll take a look at the probabilities in terms of what they're talking about. 4.75% by June of next year and ending 2024 at 4.25%. We'll talk about some of those projections. Stay tuned, folks. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations.
The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. The market's trying. We're close. We're within about 5 points of flat territory, man. You got the S&Ps up about 11 from where we were on the opening bell. We're still negative by 5 points. NASDAQ 100 leading the way in red territory, off about 0.6%. Dow leading the way in positive territory, up by 0.4%. And the Russell off about 0.4%. We jump over. IBM catching a bid. Look at that move, man. From 134 to 139 on the open. IBM up 2.6% right now in their numbers. We take a look a little longer term. Let's back it up even more than that, right? Maybe this is a breakout, man. Maybe that was your test. Our man Bud Rolfs, love him, miss him tremendously, man. He was the channel master. If you're unfamiliar, folks, used to do a program at TFNN for years. Outstanding newsletter writer. And he loved channels, taught us all a lot about channels. And he would say, you break out of that channel, that's not the breakout. You come back, you test that channel, okay? And that's the buy, okay? You come back, maybe you test it on light volume, okay? But either way, you wait for the breakout, you wait for the test. That's a pretty clear test, man. And boy, you're talking about a breakout. This thing has been in a downtrend channel from the highs of 2013. Nice 10-year downtrend channel. And yeah, you could probably make a short-term channel in terms of just where we are over the last 5 years or so. Check out that on IBM. I'm just going to put one bar on here to show. Yeah, we're potentially lining up on the short-term basis to the upside in similar fashion, starting where we were the COVID lows. Why not, right? Yeah, so check that out, man. You're catching a bid. You break out of that. They get some strong numbers. You're catching a bid on the numbers that they have, even on a negative day in the market. Netflix shares. Yeah, quite a drop-off. It's funny, man, in terms of I have friends in my group chat hashing it out, having a conversation, and it's not an argument, but a debate, we'll call it, about those Netflix numbers in terms of profitability, in terms of debt, in terms of growth. Because, boy, it's perplexing, right? You get a 7.5% move to the downside when they had 6 million subscribers versus 2 million. But nonetheless, that's where we are. That's where expectations are in this market. You jump over to Tesla shares off 4.5%, basically at the lows that they had been flirting at. We jump over to American Express, as Kevin mentioned, out with their numbers tomorrow before the bell. They're down 1.5% with the market right now. And let's jump back to a little interest rate hike discussion. So in terms of where we're going to be, okay, the economists surveyed expect the Fed to keep the rates at their peak level through the year's end. They're split on whether the first cut's going to come in January, with more than a quarter seeing a reduction then, okay? So more than 25% of the survey is looking for potentially a cut. We're talking about when we're getting cuts, and we're talking about in like 4 or 5 months, which is crazy, but that's where the conversation is. Maybe we get a cut in January of 2024, still only about just over a quarter of the respondents to the survey. The median of the group sees the first cut in March, with rates falling to 4.75% by June of next year, as I mentioned. You'll end 2024 at 4.25%. Now, this is where things can start to make sense, okay? Because a cut in January, and I'm giving you my opinion here in terms of making sense, but a cut in January seems aggressive, right? It seems very soon. But if you cut in January and you're still ending 2024, folks, we're going out. What is that? 16 months? We're going out 16 months, and you would still have the Fed with a 4.25%. That means money markets are still going to be giving you 4.25% 16 months from right now. Okay? That is a restrictive rate policy 16 months from right now. Maybe that's what they're looking for, man. The projections are slightly higher than in last month's survey. We talked about that, right, in terms of where those bars are. Yeah, we'll see how it goes, Jimmy. And that's, it's interesting when you talk, and our man Jimmy in the Den, he's saying, cuts can only happen in January if the world's burning and chaos reigns. And I don't know what the numbers have to look like. That's the more interesting conversation is, I think that it's very difficult to even imagine how quickly there needs to be a deceleration. Folks, we just had core CPI at 4.8%, okay? And the comps that we're going to be dealing with, especially on the energy front going forward, are not going to be helpful. Not like they were helpful to bring those numbers down over the last few months. With that in mind, though, we've already seen how the Fed can pause, okay? So keep that in mind. Remember where the numbers were when the Fed said, we're going to err on the caution of not hiking. Because I feel like that's going to be a conversation that is similar when they get into the cuts. And that they have hiked so many times that they have room to cut and still be restrictive, and you have time to stretch that out, because 4.25%, folks, okay, that is a lofty number to end 2024 at. That is still going to be restrictive in some degree, okay? We're still going to be dealing with lofty mortgage prices if you have the Fed funds rate at 4.25% by then, right? Talking about the odds of a recession, okay? We're only talking about 18% for the hard landing now. And again, this is just a survey. These are just people answering questions. It is just consensus of opinions, okay? It's important to understand what market participants are thinking about, but it is something that has been tragically wrong many times over the last few years, right? In terms of where we'll be, in terms of inflation, et cetera. Economists have become gradually more optimistic about the outlook. 24% say a soft landing, 58% say a recession, and 18% say a hard landing, but not a recession. So about a quarter see a continued expansion with a soft landing, 58% say a recession. But it's not going to be that harsh, folks, if we're at 4.25% at the end of next year. That's kind of the takeaway with that as well, right? Because I would agree, Jimmy, man, if things are that dire we got to be cutting in January, then how are we going to be stuck a year later at 4.25%? That's going to be a slow cut. And maybe that's just what they can get away with in terms of letting things play out, easing the pain, keeping, your foot on the economy to some degree. But yeah, so what it's worth, we get a Fed decision in 6 days from right now. And then no matter what they say, folks, okay, you got 2 months of data. And that's going to be important data. We're going to get the months of July and August before their September 21st meeting. And then we're going to get even more data after that. So we'll go from there. All right, what else we got? We talked a little bit of Amazon. They're going to be talking about Amazon coming up on Fast Market today. And check this one out. You're going to pay with your palm. Amazon is going to launch Pay by Palm technology at all Whole Food stores by the year end. It's crazy how this stuff just comes so quick, man. They're bringing its Pay by Palm system to all of its Whole Food stores by the end of the year. Amazon One lets users enter and pay for items in stores by swiping their hand over the kiosk. When's it going to be the iPrint, man? When's it going to be the iPrint? I say it in jest, but it's coming, man. Those iris scans, the movies always get it done, man. Okay, the movies always get it done. Those sci-fi movies, they're scanning your retina. Amazon could probably do that right now, but they know that would face too much pushback, right? Getting a retina scan to pay for your food would give us all a little bit of creeps, as it probably should. Nonetheless, you're going to be paying with your palm, though, before you know it. For Amazon, pretty interesting. This technology's flying, man. We're going to have, I talk about, Tommy's almost 2.5. He'll be 2.5 in a couple weeks. What's the world going to look like when he gets a car in 14 years, man? Is he going to need a license? How crazy is that, right? Is my son even going to need a license in 14 years, or is he just going to be jumping in automated self-driving Teslas, popping you around town? Stay tuned, folks. One more segment. We'll talk about some of the other equities with action this morning. Stay tuned. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all Tigers and Tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps down about 5 points. We got an acceleration on the open by about 10 points. We're sitting right now at 45.91. NASDAQ claws back some of those losses on the open as well, down about 0.5%. You had Blackstone out with their numbers. $1 trillion is what they got, man. Not bad. They had a goal of 2026 to get $1 trillion under assets, and they get there in 2023, right? Pretty remarkable. First among its peers to hit that mark. In 2018, they set a goal of getting there by 2026, and they got there early thanks to a concerted push into lower risk, lower return strategies such as insurance, infrastructure, credit, and certain types of real estate. Not bad, man. $1 trillion. Yeah. They're at 991 at the end of the first quarter, and they were at 940 a year earlier. $60 billion in a year. Inflows were $30.1 billion in the quarter, with insurance and credit, including real estate credit, pushing it over the threshold. Net income $601 million, or 97 cents a share, compared with a loss, and they're basically flat on those numbers, down about 0.6% for Blackstone. We jump over to Netflix. We see how the movers and the shakers are moving. They're moving lower. Netflix off 8%, man, right near session lows. You jump over to Tesla. Yeah, Tesla, near session lows as well. We jump over to the big dogs with Apple shares up about 0.3%. And how about Microsoft? Microsoft basically flat. My dad was talking about this article yesterday on his program. Satya Nadella, $1 billion. Not bad to lead a public company for less than 10 years, right? Absolute. That's $100 million a year. Now, Microsoft, so he gets $1 billion. Microsoft is valued at $2.6 trillion. Right, so think about that. He has $1 billion, and he has 2,644th of the company, right? Because it's 2,645 billions get to the value. So, for instance, that would be like, wow, we could finish it. He's been there for 10 years, folks, and you go back to 2014 when the stock was at about $35. It's 10 times that value right now at $350. Not bad. Stay tuned. Basil Chapman's up next, folks. Live programming after that. Have a great Thursday. We'll talk to you tomorrow. Have a great one, everybody.